Welcome to the Foundry, where leaders are forged daily. And now your host, George Roberts.
Welcome back, entrepreneurs. Today we welcome Matt Fore, founder of Ice Cream with Investors, a podcast devoted to real estate entrepreneurs. Welcome to the show, Matt.
Thanks for having me, George.
Now, let's start by getting your background and experience. I understand you started out in what you might say the standard way. You started out in residential real estate, and then you moved on to some bigger and better things.
Yeah, absolutely. So I'll take you back a little bit. So I've spent over a decade in sales and sales leadership at some of the largest technology companies in the world. And that's where I still am as my W-2 career today. But how I got involved into real estate is in 2016, I was a part of a very large acquisition pursuit of a $10 million net new logo for our company. And I was supposed to receive a life-changing commission check. And when I saw the number on paper, I started looking through all this different ways that I could invest this money. And I heard everything from crypto to bonds to annuities. And I had a mentor at the time who was really big into real estate. And he said, you should look at this real estate stuff. You get cash flow, tax benefits, appreciation. And then I got the faithful call from my VP at the time. And I want to preface with, this was a former company that I used to work with, but he said, hey, you're not going to get that check. I instead was going to get 2 cents on the dollar. And I remember asking, like, wait a minute, how did this happen? And he said, Matt, how much money have you made this year? And I told him, and he said, well, isn't that enough? And so it was at that point that I realized that if I wanted to give back to the causes I cared about, to pursue the passions I wanted, and to achieve the financial goals that I had in my life, that I was going to have to forge a different path. So that led me into single family real estate, which led me into real estate debt, which led me into multifamily, which led me into a whole different slew of investment ideas. So I'll stop there and we can take it from there.
Yeah. So, I mean, Matt, certainly you're not telling us that there's no loyalty in the corporate world.
Yeah, it was a rough time. Look, and I'm happy about all the time I've spent at my W-2s, the relationships, the trainings, the knowledge that I've gotten from that. But it just kind of made me realize at that point that your financial future is not in your hands as long as you're working at a W-2.
Right. Well, I love it. And great lessons there about taking a lesson and learning from bad news, right? So you got that bad news that, wow, we're not going to do for you what we said we would. And all of a sudden it led to bigger things. So I'm not going to spout about the things that happened to me in the corporate world, but I look back on them and I say, thank you, because you know what, you might have rained on me 10 years ago, but I decided to go out and live a bigger life as a result. So great work there. Now, you mentioned being a sales leader. So before we get back into real estate, can you tell us what is the greatest lesson you've learned in leadership?
Oh, man, leadership is one of the most humbling experiences I've ever had in my life. I absolutely love it, but it took me a long time to really find my leadership principles, my leadership philosophy, and how to ground yourself in those principles to make sure that you understand where you want to go as a leader and how you're going to lead a team. And more importantly, knowing what you're going to do in certain situations before they ever happen. So I'm happy to take that conversation wherever you want to go, but that's probably one of the biggest learning lessons from it.
I love it. Well, first, let's take one from left field. Any philosophy that you are particularly subject to, either in general philosophy or maybe management philosophy?
Yeah, I had a leader one time who told me probably the greatest leadership advice lessons I've ever learned. And that is, you have to meet people where they are. And I think, George, we live in a very divisive culture these days, people shouting at each other from across the aisle, from across the room and things like that, and not truly trying to understand not what this person is saying, but why are they saying that? And so he was trying to give me that advice in the moment and say, meet people where they are. That could be physically meet them where they are. That could be emotionally meet them where they are. That could be mentally. And sometimes that means not always going down to their level. Sometimes it means you have to rise to their level wherever they are. So I would say that is the biggest principle I try to take forward with me in any kind of interaction I have with somebody, is meet them where they are before you're trying to go where you want to go.
Yeah, that's great information, great lessons. And usually when I ask a question like that, I'm looking for tips, but what I see from you is really more of an attitudinal thing. When you say that leadership was one of the most humbling experiences of your life, sounds like you've got the right attitude. So that's your growth attitude right there. Love it.
Yeah, not was, is, because leadership is evolving sport.
Okay, good. Yeah, love
And
it. Well,
And I'll say this too, leadership is bi-directional. And I think sometimes we get led by the people that we're actually in charge of leading. In fact, was having this conversation yesterday where I was a little over my ski tips in the conversation we were having. I wasn't sure where to take this, and I wasn't putting together all the pieces. And through the conversation, I was saying, hey, does this make sense? Tell me about this. Why can't we do it this way? And those sorts of things. And they were leading me through that conversation.
yeah,
And then my job was to go implement the plan at that point. So that's just
right.
an example of leadership, I believe, is bi-directional as well.
Yeah, I love it. Yeah, like many leaders say, you hire great people and get out of the way. And
That's it.
good to see. Yeah, certainly I wouldn't want to hire people where I felt I was more expert than them in every way. That would be kind of a waste. So
That's right.
yeah, great to see people grow and get ahead of you in certain ways. Beautiful. Well, let's go back to real estate since that's mainly what this show is about. So tell us about your progression. So you had that conversation and you decided, well, what the heck, I'm going to have to do something else. I mean, you are still in the W-2 world, obviously doing very well, still in sales leadership, but you decided that you had something more out there. You started working on the side hustle. So take us through the progression.
Yeah, absolutely. So that event happened to me in 2016. And in 2017, I think it was like 3 or 4 months later, George, I ended up buying my first residential single family unit. And I remember at the time, a lot of folks in my circle were saying, hey, isn't that risky? Don't you remember what happened in 2008? What are you doing? You're going to get calls, tenants, termites, on all this kind of stuff. And I said to them, I remember explicitly, I was so clear about it because I was like, yeah, it could be risky, but at the end of the day, I just lost way more money than this down payment's going to be. And if it all goes to heck and it burns in flame, at least I will get an education from it.
Yeah.
So I started with that single family unit. It was right around the corner. It was basically turnkey. It been built the prior year, only one owner, continued to scale down the single family portfolio, got it up to 10. And then I ran into that limit, right, with Fannie and Freddie of, hey, you can no longer get agency debt. And I had 2 paths I could take. I could continue to go look for private money, credit unions, and things like that. But for me, I have other interests in life. I have a other career. I have other people in my life that I want to make sure I'm present with and intentional with. So I was like, hey, maybe multifamily is a better way because I can grow as a team. I can scale. I can still get all the benefits, et cetera, and jumped right in and started scaling the multifamily portfolio from there. So haven't really talked about the debt at all or anything we're doing there, but happy to kind of take that conversation wherever you want to go.
Yeah, really exciting. So yeah, you get to that. It changes, but you said it was 10 for you, and then you got to get what is it, like a portfolio loan? That's really hard. I always dreamed about doing 4 units, right? Do a bunch of quads, and then you could get 40 before they kick you out. But yeah, I got out as well. So you realize that there was a bigger game out there, and that single family is great, but it really is hard. Actually, there's another thing you mentioned there that I thought was very interesting. Now, as an investor and somebody who's looked at everything, I mean, you looked at everything from, I think you looked at equities, real estate, you looked at the whole gambit and said, well, I think I'm going to go in real estate because of all of its benefits. But it reminds me of a Charles Dickens quote. I think I should probably misappropriate, right? It was the best of times. It was the worst of times. In investing, the worst of times are the best of times. And you can't explain that to your family members unless they are investors.
That's funny you say that because as we're here late 2022, it feels a little choppy out there. And I know in my network, everybody's got their eyes wide open thinking, okay, now's when you can really start accumulating some wealth. But a lot of the American public is thinking, oh my gosh, this is a bad moment. So it's funny you said that.
Yeah, awesome. Yeah, I remember 2020, and we should probably dovetail into that in a minute or two. But 2020 was the last time things started looking a little choppy. And it turned out that was a tempest in a teacup. Now, we don't know what's going to happen here. I mean, my personal belief is that the economy is in some major straits. And at the very least, our consumers are in major straits because we have to, just to continue the sailing analogies, that inflation is coming. And, a lot of people, particularly those that are not towards the top of the economic spectrum, are going to have a lot of trouble. I mean, I think real estate in general is going to sail through, particularly if it is commercial. Do you have any deeper thoughts on the economy or where real estate in general is headed?
I do, but they're probably all ignorant, right? So I'm not an economist. I don't know where things are going, neither do they, to be frank with you. I think inflation is here. It's not coming.
Yeah.
It's already here. And I think a lot of people are getting pinched out by that. We're in a very fortunate time that there's so much money in the system right now that we're not feeling it yet. You can see it in the numbers, but we're not feeling it yet with unemployment still at 3.5%. So I think a lot of that will still get drained out of the system. I think probably the beginning of 2023 is going to be a little bit rougher than it is now. And then ultimately the back half of 2023, 2024 will start coming out of things. In terms of where real estate is, I mean, look, real estate is, I think, one of the best inflation hedge, generational wealth building activities out there that you can do. And in real estate, as long as you're not on a time frame, it's always going to go up and to the right. Will it go up and to the right over the next 6 months? I don't know. Will it do it over the next year and a half? I have no idea. But will my grandkids inherit that real estate and it'll be worth more than it is today? Absolutely. So I think in real estate, we're always in the middle of buying something, never in the middle of selling something. And as long as you have that kind of view on it, then you're going to be fine in it.
Yeah, I think excellent approach. And for the stock market, I think there have been certainly decade-long periods that the stock market has gone down or sideways. But with that long-term approach, you can make the unconditional statement that it's going up and to the right. Love it. Now, I think I did sort of cut you off in your march towards the multifamily. So you started out with the single units, you got 10. And then was there some sort of an aha moment? I guess it was really the bank. The bank was the aha moment. It's like, well, hey, I don't want to go and have to deal with the credit unions. I'm just going to play a bigger game.
Yeah, and there was another one too. So that happened in 2020 because I had just closed on my 10th property at the beginning of 2020, like a month before everything kind of shut down there. And then in the summer of 2020, two things happened to me. One, I had an HVAC unit go out in probably my best deal because it's a BRRRR deal. I got paid to own that, and I still get paid every single month to own that. But the HVAC went out in it, and that's fine. I have reserves for it. It was a $5,000 issue, but that wiped out my cash flow for the entire year on that property, right?
Yeah.
And then the second thing, right after that, I mean, like literally a month after that, I had flooding on one of my triplexes that again wiped out the entire cash flow for that unit for the entire year. And I was like, wait a minute, if I'm going to build this financial path to replacing my income with passive investments, then I'm going to need to find a way to de-risk it. And in technology, we call it a single point of failure. When you have one door, one tenant, one rent check coming in, that's a single point of failure. You want to diversify away from that. And so I started exploring, okay, how can I diversify away from this single point of failure? So long-winded way of saying, yeah, the banks were one of them. I recognized that I was going to have to go find different debt, and that was going to be a heavy lift in addition to the other things that I had in my life. And then that second thing was the single point of failure idea of seeing that these major issues that happen on your property, not if they happen, when they happen on your property, wipe out your cash flow for the entire year on that.
Yeah. Yeah. Typical story. I hate to say it, but that's what all the landlords say after a while. I got a bad tenant, or, you know, the hot water heater or the furnace went out. Boom. It's much nicer here in multifamily. So that was sort of your entree into the multifamily. Now you're thinking there's got to be a better way. So take us through the progression. How did you get like 1, 2, and now I think you're up to 750 units. So obviously been through many, many transactions.
Yeah, it was really just networking, right? So I'm going to steal a question that I think you'll ask at the end of the show in your lightning round, but really you got to put yourself out there and grow as a network. And real estate is a team sport. There are going to be people that are specialists in different things than you are, and you can all combine and add a greater sense of value. So it was really a group networking. I was networking in the mortgage space and the note space. I was networking in self-storage, mobile home parks, and multifamily. And I just seemed to jive better with the multifamily group. And so as we started talking through it, and I saw the economics of the fact that we're in a housing shortage, people always need a place to live. There will be always a demand for multifamily housing, specifically as the younger generation rents more. It just seemed like a right fit for me.
Yeah, amazing. Now I wonder if some of that is the sales leader in you. I wonder if certain people, like you seem a little analytic, you mentioned tech, leadership, maybe the people who are leaders as opposed to more the lone wolf. I see like the lone wolf is the one who tends to go into the single family. I mean, you can do very well as a lone wolf. You don't really need, you need contacts, but you don't really need partners.
Yeah, I want to say something on that. So I have this theory in life right now, as we continue to be a globalized society, that if you think about it in the 50s and 60s, you needed to know everything and you needed to have the contacts and the resources to go be successful in life. And as we flattened out the earth, you start to realize that your ability to create a team and who knows you and is more important than what you know and what you're
Yeah.
able to achieve. So
Yes.
the one thing that I tell anybody that's younger in their career right now, that your ability to be empathetic with people and bring them together for a common good will scale way faster than your specific skill set or your resources that you have in your hometown or back pocket.
Yeah, 100%. If you've got the skills, multifamily is a way that you can scale extraordinarily fast. Reminds me of a lesson I learned from graduate school. My physical chemistry professor told me that all of our tests would be open book, which shocked me because I thought we're in graduate school now, shouldn't we know something? But he said, life is an open book test, and he's 100% right. I mean, wow, if I took one thing out of the class, it's that, yes, I needed to know chemistry to be a scientist, but when I'm in the lab, I could look up anything I had to. It's not what I remember.
You just need to be resourceful, right?
Exactly.
And I was talking to a doctor friend the other day, and she was like, you would be surprised how many times a doctor leaves the room to go legitimately Google something to figure out the certain conditions and things like that. A little shocking, but also, again, they don't need to know everything. They just need to know where to go get the information.
Absolutely. You need to know what you don't know. And yes, I've had my suspicions that many times the doctors left for quite that particular purpose, but but it's okay because again, I completely respect that. And again, yeah, life is an open book test. Wow. Floored me at the time, but 100% true. Be resourceful. Great quotes. So let's move on a little bit. Ice Cream with Investors sounds like a really exciting show. I like to highlight other shows here because obviously whoever's listening to this podcast, it's probably not the first podcast they've come across. So tell us about the show.
Yeah, absolutely. So I started the show in 2021, and it really came from the tail end of 2020. I had a couple of things happening at once. One, there were a lot of folks in my industry who saw either their salaries get cut or their peers get laid off and things like that. And they were starting to ask me about different ways of how I became financially free and what I was doing in real estate and things like that. And I thought a good way to kind of extract that information was to just publish out a show that talks about it and that they could find resources to listen to. And then the second thing is I'm sitting here talking about networking and building a team and things like that. It's a great, fantastic way for me to bring other people on the show to talk about different real estate that they're in. So when I first got involved in real estate, I thought it was the fix and flip that you see on HGTV. And what I've learned over the past 7 years is it's so much more than that. I mean, it is a multi-trillion-dollar industry just in the United States. So I have people on all different angles of the spectrum for real estate, whether it's notes, self-storage, mobile home parks, multifamily, fix and flip, bursts, short-term rentals, all that kind of stuff. And it's a way for me to be inquisitive with them, but also for me to build a connection and help hopefully teach other people about it. The reason why we call it, the reason why we call it the reason why we call it Ice Cream with Investors is because at the end of 2020, it just felt very pessimistic to me. I thought, I want to bring an optimistic tone to educating people about this great asset class called real estate. And who's pessimistic when they're thinking about ice cream? So we call it Ice Cream with Investors. We ask everybody what their favorite ice cream is, the scoop of the week, all that kind of stuff.
Right. Well, I don't know if you know Jeff Holst, but he's the one who has the Old Fashioned Real Estate podcast. Yep. Yeah. So, he gets out his old fashions. And I think that's another thing that makes people really jolly. I don't think I've ever seen anybody frown while drinking old fashioned.
Yeah. Well, here's my long-term plan, George, is that when we start going back to conferences and all that kind of stuff again, which I think we're finally to that stage, is that hopefully somebody out there will be like, oh my gosh, you're Matt Fore from Ice Cream with Investors. Can I buy you ice cream? And that is how I'm going to get free ice cream for the rest of my life.
I love it. Well, hey, maybe someday you'll interview Jeff Holst and you can have whiskey and ice cream. I've never tried it, but I've been told it's fabulous. It sounds great.
Yum.
All right, awesome. Well, you mentioned 2020, so let's hit the pandemic. I don't think we've really talked much about it yet, but the pandemic gave us a few things, not just this fear and people shouting at each other, like you mentioned earlier, but it also gave us extraordinarily low rates, which now that we have inflation, well, which was also sort of due to the coronavirus pandemic, now our rates are going up like crazy. And what I'd like to know is, what has changed either in your markets or maybe your execution as a result of that? So how are you responding to this higher rate environment?
So from everybody, it's going to be different, right? But here's my theory on it is in real estate, it's important that you pick the right market more than anything, because the right markets are going to survive the higher rates, interest rates better than others. So a couple of examples I'll give you. During the pandemic, Boise was a phenomenal market, a very hot market. And now you're starting to see it cool off a bit. Why is that? Because the reason why Boise was getting all that traffic was, from my perspective, a lot of people from California going to a favorable tax environment. It's a great outdoors. I hear it's a beautiful city and things like that. But now people are being called into the office. So are those jobs that were created in Boise native to Boise, or are they going to leave as well? So one of the things that I'm really focused on right now is picking the right core markets that have native inherent growth factors in them and weren't one-offs. So I'm typically trying to stay away from the tertiary markets, because in a low rate environment in the past couple of years that we've been in, you've seen cap rates suppress across the board, A class to D class, office to self-storage to multifamily. And it's important that if you have the right market, the elasticity won't be as elastic. And what I mean by that is when you see a C-class property trading at a 5 cap and an A-class property trading at a 4 cap in the same market, there's only one of those asset classes is going to move very far in an interest rate hiking environment. And that, and to my opinion, is the C-class. So one of them will revert back to the mean. So I don't know if that answers your question, but overall, what I'm looking at right now is making sure that I pick the right core markets with inherent factors that are leading to growth, not these one-off examples.
Yeah, I really love it. I mean, first of all, trends, continue for some time, but they reverse, right? Trees grow tall, but they don't reach the sky. And I think it's very interesting. You are sort of calling an end to that very important trend of the tertiary markets. I mean, I've done well in a tertiary market, but I bought while it was still going up like nuts. So I don't think I'm too worried about that. Yeah, absolutely. And let's see, maybe we'll move into with that market. So you did mention you're staying away from the tertiary markets. Well, let's see, one more. Yeah, Boise, Idaho. That's one that we've received some warnings on. I know Stefan Cvetkov, he's been doing a lot of work to figure out how things look in either a mild or a severe recession. Don't know if you checked him out yet, but somebody definitely worth checking out. And Boise always tops his list of, watch out. So definitely something I want to keep my eyes on. I don't like these hottest markets at all. Do you want to name some of your markets and maybe just go through one in detail? Like, why was this the market to invest in?
Yeah, so I will put a quick disclaimer and say it's not really all tertiary markets. That might be too much of a blanket statement, because I'll throw out Huntsville, Alabama as an example. I love Huntsville, Alabama. The FBI is moving 5,000 jobs there. Every time I turn on the news, I'm hearing about the space race. Where's the space capital besides Houston or in Florida? It's in Huntsville because so much manufacturing is done there. So it's really about the tertiary markets that haven't seen a ton of native inherent growth before the pandemic. They just got a bunch of people moving there. One that I love, I'm going to call out my hometown, is just Nashville, Tennessee. Nashville right now, Amazon has moved here, AB has moved here, Michelin is growing their presence here. There's just a lot of native reasons that companies are moving their jobs here in a no income tax environment with property values still below the national median. I just continue to see good things coming from the Nashville environment. So that's, I guess that's a good example of what I'm looking for when I'm looking for a market versus the overall growth of the market over the past 2 years, for example.
Yeah, I love it. We'll love Tennessee. I mean, people are moving there. And if I'm not mistaken, I think they also get a lot of affluent movers there, and it's the Atlas moving report. If you want to take a quick look at that, not just the U-Haul, which is also important. You want more bodies, but you want people who are making a ton of money because probably, I hate to say it, but they make better tenants generally. And if you're improving the place, your rent's going up.
Yeah. So as a perfect example, Amazon announced that they were going to bring 25,000 people to Nashville. This was before HQ2 in New York canceled out, and they decided to shift some of those jobs here. But when that report came out, they said the average salary of those 25,000 people will be 150 grand. And I don't know what it's like in your market, but 150 grand is a great median salary to go attract renters from.
Yeah, sounds good. Sounds like A-Class might be doing better in the future. Maybe. How about specific acquisition? I always feel like a great deal has a great story behind it. Do you have any particular acquisition that you'd like to talk about in greater detail?
How about this? I don't in greater detail other than like 3 things that I look at when I'm looking at making an acquisition or being an investor in a passive investment. Would that be? What do you think about that?
Let's do it.
Awesome. So I think a lot of times now that I've got some friends in my network that are interested in being LPs and things like that, they always send me deals and they're like, hey, is this a good deal or not a good deal? And I break down the 3 things that I look for in a passive investment for anybody. One is the team. The second is the market. The third is the structure of the deal or the business plan. So if you're okay with it, I'll just kind of break down each one of those.
Yeah, sure. That's good. Yeah. So starting with the team, what are you looking for?
Yeah. So first of all, none of these, if there's a no to them, disqualifies the deal, right? These are just questions that I'm asking to just kind of understand what's going on in the deal. So the first and foremost is the team. What I look for are teams that have done deals together and have a background in real estate. We know that in businesses are going to go south. They will go bankrupt. There's going to be challenges that happen in that deal or that business. And what I want to know is that this team knows each other well enough to make it through those. So have they done a deal together? If it's a rehab, have they done it with a contractor that they're hiring? Have they done a full cycle deal? Have they done a deal in this market? So again, none of those kind of like disqualify the deal, but you want to see that a team has a proven track record of success of at least working together in that market or executing the business plan that they have in front of them.
So
for that
that's good. I'd like to draw that out a little bit because I know a lot of people ask about the experience of the team, and I would agree the team is first. Bet on the jockey, not the horse, as they say. But you brought out a lot of deeper points, like has the team done a deal together? A bad partnership can kill a good deal. And that doesn't mean you have bad partners per se. They may be all well and fine individually, but did they not get along? Did their skills not mesh? Was there something missing? Yeah, that's huge. And then I love your question about have you used a contractor? Or another good one could be, do you have a property manager picked out in the area? Either picked out or hopefully worked with in the past. Property managers are different. Each one specializes in a particular niche. So if you take your Class A over to Class C property, yeah, maybe they spend too much money. Your Class C property manager may be very good at what they do, but what if they run it into the ground? So just love it. Yeah. So I think it's easy to ask the question, what is your experience? And you get back a 5-page resume and just get blown away from it, but just make sure that you're asking the right questions.
And something else I'm looking at right now is your lender's experience. So have you worked with this lender before? Because in a rising interest rate environment right now, you could see some lenders hesitant and draw out their closing. So I want to see, have you worked with this lender before? What's their track record on doing deals, et cetera?
Right now, don't they all say that we can get it done on time? And
That's right.
Here's the other thing lenders will tell you. We close the deals the other ones can't.
Yep.
Yeah, I love it. Yeah, it could be a great lender, but definitely I think somebody's less likely to stick the knife in if it's a second or third deal. You're going to know what to expect. Did they get it done on time last time? Or were you left twisting in the wind, wiring additional earnest money funds because they couldn't?
Yep. So the next one is the market. I think we talked a little bit about this, but what I'm really looking for more important than anything is the native reasons why that market is growing. So I don't like to invest, or frankly, I don't invest in declining markets. So if the population is declining, that's a quick no for me. But why is the population growing? Is it jobs? Is the income growing with the population, or is it a bunch of low tech jobs, low manufacturing jobs, et cetera? And can the sub market handle the income that you're wanting to raise? I'm sorry, let me rephrase that. Can the market and the sub market that your property specifically sits in handle the new proposed rents if you plan on raising the rents? So we typically like to see 4 times the rent to income to rent ratio. If that's starting to get down there to 2 or to 1.5, then what's your ability to execute that kind of business plan?
Yeah, excellent point. Especially since we expect rents to rise, we expect inflation. And if you're investing in real estate as an inflation hedge, that's another thing I look at very, very carefully. I'd like to see as much leeway as possible for the rents to go up, because again, we don't even know what money's going to be worth in 5 years. So let's hope that the incomes are high and that your tenants do well over the next 5. So, okay.
Yep.
So 1 and 2, so you've got the team, you've got the market, and then finally, let me guess, we're going to talk about the deal.
Yeah, the structure of the business plan. And I think there's really 2 parts to this. One is the debt. What kind of debt are they taking on to this property? And the second is the business plan. So in terms of debt, what we're looking for, is this fixed or is it floating? Is it agency? Is it non-agency? Is there bridge or mezz debt needed to get the job done? What's the length and LTV? All those sorts of things. Again, I'm not going to turn down a floating rate non-agency debt right now. However, I will ask questions around bridge and mezz debt. I think we've gotten a little over our ski tips implementing mezz debt, bridge debt strategies over the past 2 years. And yeah, I'm a little hesitant anytime I see that right now. And then the last is the business plan. So is it a development deal? Is it a value add deal? Is it lease up? Is it a turnkey deal? Is it a rehab? All of those sorts of questions will help me understand that deal a little bit better too. As a side note, I'm a little hesitant on this value add rehab deals right now, just because I think a lot of the rent increases have already been priced in. And anytime interest rates are rising and you're seeing softness in the economy, doing turnarounds is a little bit more difficult than when times are good and you've got a tailwind at your back.
Right. So you're not a fan of those apartments where they've renovated 80% of the units, charging mainly full price, and tell you that there's a lot of meat on the bone, huh?
There's still meat on the bone. Go do these 20. There's still meat on the bone. That's funny that you said that, because that's one
it
of
seems
my.
Like we see a lot of those these days. People are looking for something safe, and maybe ironically ending up with something a little bit dangerous. But
yeah, I had a deal hit my desk the other day that was like, "Do you want to help be a part of this?" It's 90% rehab. There's still some meat on the bone. It was in Orlando, so I love Orlando as a market, but I'm like, I just don't see how you're going to be able to execute renovating that last 10%, raising the rents, and then in a rising cap rate environment, get the value out of it that you want.
Well, now, since you engaged me on that, this is one of my pet projects, is going out and figuring out what's going to happen next. I was an award-winning data scientist before this, so I used to tell people, I predict future for a living, but I get paid to do this. But I feel like those deals are going to go away. I mean, I feel like when people are asking, when they say like, hey, I want to leave some meat on the bone for the next person, I feel like what they're really saying is, I'm waiting for a bigger fool to come along and overpay even more than I have. I feel like when, you say things are getting choppy out there. I mean, when we start to see the breaking waves, that those deals are going to go away. And the idea that you can get somebody to take over a half completed project and pay me full price, those greater fools are going to be gone. So, but we still live in a day and age where people are doing that anyway. Any further insight?
Yeah, my favorite is when they talk about, oh, this market's great because the rents raised 15% last year. And I'm like, great. The national average was 18. So you're telling me that market's even worse. I don't know if those are the right numbers, but I think a lot of people right now are boasting about their returns and telling people why they should invest with them because they've had this great track record over the past 4 years. And I'm like, well, I mean, everybody did. So I'm a little cautious about pro formas that include like exorbitant rent increases beyond like the 2%, 3% historical average, and people that are also including boasting their exits that they've had over the past 4 years, when really it's been a huge tailwind environment.
Right. Yeah. Rising tide lifts all boats. Well put. But actually, one thing I wanted to back up and say, your top 3 list of how to evaluate an investment is obviously not unique, but I want to give you kudos for some very unique answers. So I hope people who are listening, go take some notes, rewind the tape, go take some notes, because again, we've heard it all before. I mean, you've got the operator, you've got the market, you've got the deal. But again, those are, I think, some relatively unique approaches and some very deep questions to ask. But now I think, we're getting close to the top of the hour, and I don't know if you have another meeting. So how about this? What do we do our lightning round? What do you think, Matt? Are you ready?
Let's do it.
All right. So tell us something about one of your real estate markets. Doesn't have to be about the financial end, that most people wouldn't know.
I'll tell you that I think Greenville, so we're going to go on this tertiary market. I think Greenville, South Carolina is an underrated market right now. They're getting a lot of these job from auto manufacturing right now. And I think that's one that people are sleeping on. I will also tell you, I'm not invested in Huntsville, but I love Huntsville. And I think the secret's out now, but if you haven't done some research on it, tons of rocket jobs moving there. FBI is moving 5,000 jobs there. There's a lot of things going on there.
All right, we'll throw you one curve. Well, what do you think about Kansas City? That's one I've heard a lot about recently. I feel like it's one that's gone from maybe under the radar to really on a lot of radars.
I don't know enough
thoughts
about
on
it.
KC? Hot
Yeah,
takes?
I don't know enough about it to give you a hot take, other than you don't see a ton of people moving to the Midwest right now, generally, in theory. So I would have to go do some extra research on it.
Okay, yeah, fair enough. I'm from the Midwest, so I mean, we get beaten up all the time. It's okay.
Hey,
All right,
hey,
tell us some advice you'd give your younger self.
I think we talked a little bit about it, but who knows you and who you know matters more than what you know. Another thing I would tell myself is the easiest way to be successful is to help other people be successful first, because then there's some reciprocity there and it helps us all grow together. The last one that I think doesn't get talked about enough is that cash flow income matters more than accumulation. So I used to take my money, bury it into a 401k, and pray that it grew over the how many ever years I had until I was 59 and a half. But my bills come due every single day. So buying cash flow streams is my retirement plan. I still do 401k and still invest in the equity markets. I'm not saying don't do that. But cash flow is a surer path to be successful in retirement than burying it in the ground and hoping that there's more later when you come dig it up.
Love it. Well, hey, I certainly believe that's true today. I think it's going to be a lot more true tomorrow. Well, real estate is also a place where I hear a lot of bad advice going around. So what's the worst real estate advice that you've heard?
I'm going to buy when the market dips. And let me give some context on this. First of all, I believe in life that there's no such thing as a perfect opportunity. You have to create your opportunity in life if you want to be successful. And I've heard it time and time again. Market's frothy, market's hot. I'm going to wait till it dips and things like that. And I will go ahead and tell you, George, I feel like I immersed myself in financial literacy and become financial independent and things like that. I think I'm very high on the emotional scale in finances. And I was scared to death to buy anything in March 2020. Doesn't mean I sold anything, but people forget when there's blood everywhere in the streets and there's chaos everywhere, very few of us can act rationally and go execute a plan that we had put forth in the past. So I would say, don't wait for the perfect opportunity. You have to create the opportunity today.
Love it. Perfect dovetail. Last episode was 𝐿𝑥 and he quoted on the ride out Richard Branson, who said that opportunities are like buses. There's always another one coming. So yeah, you can give up on this deal that looks okay. So you're not sure about it. Keep in the game. Keep in the game. There are other good deals coming. Don't overbid.
That's right.
All right. Well, this is where we take a nod to the randomness of the universe. I have some random question cards here. So just tell me when to stop cutting the deck. We'll take it right off the top.
You keep shuffling, and I want to preface that I'm a little nervous about this part of the interview. But
I'm a little nervous too, because some of these questions are really weird.
All right. How about now? Let's see what we got.
All right. In which activity would you like a lesson from an expert?
Improv comedy. I think comics, first of all, they're a very necessary part of society right now, because comics should be given the free rein to say what they think is funny, not what they think is right. And people judge them for what's right. And they're not trying to be right. They're trying to be funny. And if it offends you, then maybe go find a different comic. But I love the art of storytelling, and the way they can tell stories through a joke, I think is incredible. So I would say like improv comedy.
Wow, deep advice, Matt. So I don't know if you and I together can fight cancel culture, but hopefully we'll find some things that are off limits, like not like the topics that people are trying to make off limits, but music, culture, science, and just let people investigate, play, dance, sing, do whatever they need to do to blow off some steam. We'll see.
Yeah, unless they're trying to be hurtful. Most people aren't trying to be hurtful.
Correct.
Most comics aren't trying to be hurtful. They're trying to be funny. And
well, they're trying to make money too. So I don't think they're going to do anything offensive on purpose. But obviously not to say that nothing offensive ever gets said, but 100% with you. So hopefully we're getting some deeper lessons, friends. This show is not just about real estate. We have to heal our culture.
That's right.
All right. So name a book that has helped to forge you as a leader and as an entrepreneur.
I'll give you a couple. One is Atomic Habits by James Clear. I'm a big proponent of consistency in habits, so check that out. Anything by Simon Sinek, Leaders Eat Last, Start With Why. Great, great books. And then I'm going to give you a book maybe some of your listeners have never heard of. It's called The Last Lecture. I will summarize it real quick. In academia, when you're retiring, you give a last lecture. Here are all the funny things that I've learned. Here's a funny story. Here's my last parting notes that I want to give to you as the people in the audience. Last lecture was written by a guy who found out that he has terminal cancer. He's going to die. And he talks about, like, don't feel sad for me. I'm here to give you my last lecture and the lessons that I've learned along the way. And then at the end of it, he's like, and oh, by the way, this wasn't meant for you. This was meant for my kids. So he basically films himself giving a last lecture at the age of 36 about all the lessons he's learned for his 3- and 5-year-old kid, or however old they are, to give them the lessons that he won't be there to teach them. It's a tearjerker. If you're not a reader, go check out the 1-hour interview on YouTube called The Last Lecture. It's phenomenal.
Amazing. Makes me want to look up Richard Feynman's last lecture. Of course, he was funny in his first lecture and everyone in between too. Really interesting character. How has a failure or misstep set you up for later success?
I think I'm going to tie this back to leadership and talk about when I first became a leader. I thought it was about being the smartest person in the room, being the most resourceful, understanding and directing people, when really it's about getting people bought in of where you're trying to take them, and make sure you're communicating about the message that you're trying to take them and where you're trying to take them, and allowing them to fail in the process. Life is not linear. And if a good leader, and somebody said this to me one time that just, it resonates with my heart. He said, I know you're a good leader because you'll allow me to fail in the things that don't matter so that I can succeed in the things that do. And that stuck with me this entire time. So I would say when I first became a leader, I was very controlling, very like trying to have my hands on everything. And that has been a failure that actually set me up to be a successful leader today.
Amazing. So it's about development, not direction. Love it.
That's right.
Great quotes too. We're going to get a lot of pull quotes out of this one. Okay. Can you send us out with a quote to help forge our listeners as leaders and entrepreneurs?
One that I haven't said yet, that someone said to me about a month ago that I wrote on my desk to remember, is make it better. Don't try to make it perfect. And she was saying this in a context of like her role. She's a fix-it person. Like, and she gets thrown the problems that a lot of people need to fix, but don't know where to go, how to do them, and things like that. And she goes, I started being successful at this role when I just tried to make it better, not make it perfect. And so a lot of people out there are afraid to make that journey, that leap into entrepreneurship, that investment, that leap into starting a podcast, creating content, doing all these things because they're not perfect at it. You just have to be better. And today you have nothing. So just be better in the process, 1% better every single day, and you'll be surprised at the results you'll have at the end of it. So make it better. Don't try to make it perfect.
Awesome, Matt. Well, thank you for a fabulous, hard-hitting, information-packed interview. I want to make sure people know where to reach out to you. How can they learn more about Matt Fore?
Absolutely. So the show is called Ice Cream with Investors. We're on all the major podcast players out there: Apple, iTunes, Spotify, Stitcher, whatever that is. Website's icecreamwithinvestors.com. I'm making it better. It is not perfect. We're still in that process. And then if you want to just connect with me, it's Matt Fore, Fore, on LinkedIn. You'll see my ugly smiling face up there out of Nashville, Tennessee. I love to connect with people. I love to try to help them along their journey. Just be warned that I might bend your ear on everything finance, because I love talking finance too.
Oh, shoot. Well, I wish we would have talked more about that today. Wish you weren't so shy. But I have to say, great work incorporating food into your podcast. And people who know me and they know how I eat probably find it ironic that I didn't find a food metaphor for the Foundry. But regardless, thanks a lot, and look forward to getting this one out.
Absolutely.